Good afternoon, ladies and gentlemen. First of all, let me thank RAM for inviting me to speak at this RAM Insightful series, the first, I understand, for the year. So I'm honored to be the first speaker of this webinar series. What I will share with you today is basically on Scheme Saraan Bercaga, or what is known as a reverse mortgage program of Cahaya Mas Berhad. Next slide, please. As you will see, basically the Scheme Saraan Bercaga was launched by the Honorable Minister of Finance on the 14th of December 2021. So we have started the various awareness campaign as well as opening up applications since January 17, 2022. Next slide, please. There have been immense publicity both in the social media as well as in the main media. There's been a lot of coverage. In fact, so far we have received a significant number of queries from the public, either directly to Cahaya Mas or through our partners, the Employee Provident Fund and the Debt Management and Counseling Agency, or AKPK. So let me now just share with you first what really is Scheme Saraan Bercaga, or the reverse mortgage program. Next, please. Next slide, please. Well, Scheme Saraan Bercaga, or reverse mortgage, is really a form of a loan which is normally given to retirees, basically charged against the property, which is a primary place of residence of the retiree, and the retiree will get in return a monthly payout until his demise, his or her demise. If there are two borrowers, joint borrowers in this instance, until the demise of the remaining borrower, meaning the last of the two borrowers. Essentially, one of the main features of the reverse mortgage is there's a non-recourse feature. There's no repayment throughout the life of the loan. And an important aspect is that the borrower gets to stay in the house until his or her demise. So repayment of the loan only takes place after the death of the borrowers. A reverse mortgage is actually quite popular in many countries already, particularly in the United States, in UK, in Hong Kong, Korea, Japan, and most recently, I think it's been introduced in the Philippines. So the Cahaya Mas model is basically very much modeled after the US home equity conversion mortgage program. And we actually followed a lot of the features being put in place by the Korean Housing Finance Corporation and the Hong Kong Mortgage Corporation. Now I'll go through in a slightly more detail on the features of this product in a short while. Next slide, please. Now in 2019, when Cahaya Mas was undertaking its strategic review, it looks at the various other options or product in the market other than our existing BAU. And one of the areas we felt that we should engage into is really on the retirement space, because of this need for a lot of the retirees who are actually short in terms of cash. They are cash poor, asset rich. And that's why we were looking at the conditions for a viable reverse mortgage market in Malaysia. So if you look at the conditions, firstly, in terms of the demographic trend, you will see that Malaysia is going to be an aging population by the year 2045. Now, essentially, I will not go through in detail. I understand Man Wai is going to go through a little bit more detail in terms of the numbers. But what I can share with you at this point in time is that Malaysia is moving towards an aging society. Secondly, in terms of the financial status, I think you have heard a lot from the EPF, and you're going to hear also from Man Wai afterwards, that a significant portion of the Malaysian population today are actually short in terms of savings under the Employee Provident Fund. So 70% of the retirees who withdrew their retirement funds at the age of 55 actually could only use it for 10 years. So what it really means is that our retirees have insufficient funds and savings for the entire remaining period of their life. The third precondition is really about property ownership. So under KRI, I think it's been stated that 72.5% of the Malaysian population own a house. I think in a recent Department of Statistics Malaysia outlook for 2021, I think they estimated 79.9% of Malaysians actually own a home. And if you look further down in terms of profile, if you look at just the retirees alone, basically about 90% of the retirees apparently in Malaysia own a home. So these are actually good preconditions to start a reverse mortgage program in Malaysia. Next page, please. So in terms of the scheme Saraan Bercaga, just to give you an overview, in terms of the loan inception or the loan origination time, the borrower will need to apply to Cagamas, basically in terms of the loan itself, and what they will get once the loan has been approved. They will get a monthly payout, okay, until their death. Now, on the termination side of the loan, basically upon the death of the borrower, you will see that the property will firstly, of course, be offered to the next of kin if they want to. Can you press one more time? Yeah, thank you. So upon the death of the borrower, you will actually see that the next of kin could actually redeem the property by settling the loan. Otherwise, Cagamas would proceed to sell the property via public auction or through private sales. If there's excess from the sales proceed, meaning if the value of the property has been sold for, say, 1.2 million ringgit, and the loan outstanding is 1 million, then the excess will go to the estate or the next of kin. If there's a shortfall, there is no recourse whatsoever to the next of kin or the estate of the deceased. So basically, the loss is guaranteed or is borne by the RM provider in this case, which is Cagamas Berhad. Now, let me go into a slightly more details in terms of the feature. Next slide, please. In terms of the tenor, this is a lifetime tenor. There's a fixed monthly payout to the borrower. As I said, the payout will be determined on day one itself upon the loan approval process. So basically, this amount will not change. So if it's a joint borrower, and assuming that the payout is 2,000 ringgit, along the way, say the husband passed away, the wife will continue to receive 2,000 ringgit. It's not that they will receive half, they will receive the same amount, which is the amount that has been determined upfront on day one itself. In terms of the monthly payout, as I mentioned, this is a fixed amount to be disbursed to the borrower throughout the lifetime. Repayment, there's actually no repayment until the death. So basically, a borrower need not service or need not make any payment whatsoever, whether it's principal or interest. The cost of this reverse mortgage loan is a 5% per annum fixed rate throughout the RM loan tenor and a one-time recourse waiver fee of 1.75% of the property value. Okay, this is actually a charge upfront, the 1.75%, but the 5% cost will be the interest which would be charged on outstanding amount annually. The maximum property value for the payout calculation is 3 million for landed property and 1.5 million in terms of the high-rise property. Now, let me explain here what it means. If you have a property worth, say, 5 million ringgit, and you want to do a reverse mortgage, you can come and do a reverse mortgage, but the value that we are going to give you in terms of the property is only 3 million and not the 5 million. What this also would mean is that at the end, upon the demise of the borrower, the next of kin or the family would actually get the difference in any case. Okay. Similarly, with the high rise, if the high rise is worth more than 1.5 million, the limit that we give is only 1.5 million ringgit. Now, one of the other feature of this reverse mortgage is a one-time lump sum payout, and this is available upon the inception of the loan. If you go to the Cagamas SSB website, there's a calculator there, and if you key in the details like the property valuation, your age and all that, you will also see a number called the lump sum amount. So basically, the lump sum amount is capped at 20% of the future cash flow, which you're expected to receive. And you can take this lump sum payment and you can use it actually for a number of purposes. For example, to repay an outstanding loan, okay, outstanding housing loan, so that this property will not become encumbered anymore. Secondly, you can use it for medical expenses upfront. And thirdly, you can actually use it for refurbishment of the house that you're going to stay in. Now, the reason for this refurbishment, we obviously understand that, the borrower is going to stay another 20, 30, maybe 40 years. So it's good that they can refurbish the house and make it livable, nice to live in, a good living condition so that they can enjoy the house for the rest of their life. Now, in terms of the initial expenses, the borrower will need to absorb some of these initial expenses, such as property valuation, legal fees, and things like that. And but such initial expenses can also be borne or can also be financed under the reverse mortgage loan. I would also like to mention here that, in terms of the legal documents and the stamp duty for the legal documents and the charge document, the ad valorem stamp duty, basically there's a waiver given by the Minister of Finance for the first 2 years of this product. So meaning up to December 31st, 2023. Okay, so basically, a RM borrower would basically need not pay the ad valorem stamp duty for these first 2 years if they are coming in as a RM borrower. Now, in terms of the non-recourse guarantee, basically the borrower or the estate is not responsible for any shortfall, and any shortfall will definitely be borne in this case by the RM provider. Another important feature is that the borrower resides in a home. Okay, they are able to age in place, and there's also a flexible arrangement that may be due to medical reasons. They need to move out. They will need to get the approval of Cagamas in this case. But in essence, actually, this product is actually to allow the borrower to age in place, so they don't have to worry about moving out to find for other places to stay in. So this facility is such that it allows borrower to live in age in place. Now, in terms of the next slide, please. In terms of the Saraan Bercaga, in terms of the eligible criteria, this is open to all Malaysians aged 55 years and above. It can be for a single or joint account. But if you are joint borrowers, both borrowers must be 55 and above. Similarly, the borrowers must be the owner or joint owner of the residential property that is being charged for the reverse mortgage program. Now, in terms of the property, basically it's open to all residential property in Malaysia. Again, it must be in the borrower's name or in the joint borrower's name. It must be borrower occupied and the primary place of residence, and it must be unencumbered and mortgage free. So that's why I said earlier, if the house is encumbered, is charged to a bank, there's a remaining outstanding mortgage. You can use the lump sum payment from Cagamas reverse mortgage to pay off that loan outstanding. Next page. Cagamas have entered into arrangement with Kumpulan Wang Simpanan Pekerja or Employees Provident Fund, where the EPF actually provide us with the frontline interaction with the customers. As you are aware, Cagamas is only one office in KL. We do not have any branch network, so we are basically leveraging on KWSP's branch network. so that interested borrowers can actually walk into an EPF office, or they can make appointment in the EPF website, basically to meet an EPF officer, so that they can get information with regards to the reverse mortgage loan. I think the officer at EPF would also do a first line eligibility check for this borrower, and could also provide some form of indicative monthly payout based on the age and again the value of the property and other variables that need to be input into the system. Now, as part of the arrangement, basically for a borrower to get a reverse mortgage, we actually will require them to have an advisory or counseling session with the Debt Management and Counseling Agency, or AKPK. Now, AKPK is an independent party, is owned by Bank Negara Malaysia. Basically, they will provide advisory services and counseling services to potential borrowers to understand their needs and see whether reverse mortgage is actually the correct product for this borrower. So essentially, I think what is important to note here is that we want to make sure that the borrower who comes in for a reverse mortgage loan fully understand the feature of the loans, they know their obligation under this facility, and they are coming in with the eyes wide open. So that's why we have engaged with AKPK as an independent body. They will provide all the counseling and advisory services necessary for a particular potential borrowers. And of course, if the borrower is still interested, after understanding the entire program, they would, of course, welcome to apply for the reverse mortgage loan under Cagamas Berhad. Now, the next chart will show you the process flow and the customer journey. Next slide, please. So you'll see that an interested party, an interested borrower, interested retiree, age 55 and above, could walk in or make appointment with the EPF office for an appointment to meet the officers there. And basically, once they have make the appointment, they can meet the officer. And as I mentioned earlier, the officer will discuss and share with them information necessary for them to fully understand the reverse mortgage product. Borrowers, of course, potential borrowers can also call Cagamas for some information, but it is encouraged to actually go face-to-face with the KWSP officers. Now, after interacting with the EPF officers, if the borrowers of the potential borrower is still interested, of course, they can go to the AKPK office. And in this case, again, they can make an appointment to see the counselors or the advisors, and a face-to-face interaction will take place. Now, after the meeting with AKPK, basically AKPK will give some letter of confirmation that the borrower or the potential borrower has undergone counseling and advisory session with them, and then they can submit the application to Cagamas, and Cagamas will then proceed to review as well as to process the loan application. And ultimately, once approved, the borrower will get his monthly payout. So I guess one of the perennial questions that people will ask is, how long will it take? So I think from the point of the submission of full documentation until the time when you receive the money will be about 8 to 9 weeks, because the process would also include the actual valuation of the property. Okay, so that one will take time, and of course also in terms of processing the legal documentation. So essentially, 8 to 9 weeks is quite similar to a loan disbursement process timeline of a commercial bank. So essentially, it's not much different. So basically here, as I said, if the documents have been full and a complete submission has been done, basically it will take only about 8 to 9 weeks. That would also include the what you call this property valuation being done and the loan documentation being completed and submission to the land office for the charge to take place. Next slide, please. So basically, I think I've just come to the end of the presentation with regards to Scheme Saraan Bercaga. As I said, basically this facility is open to retirees, especially those who are cash poor and asset rich. We know that there are a lot of Malaysians currently today, due to the circumstances, find that is, and also because of the increased cost of living, find that they may need to find alternative funding options. And reverse mortgage or scheme Saraan Bercaga is one of those options. I like to highlight that the scheme Saraan Bercaga that is being offered today is a conventional product, and the Islamic or Sharia compliant version of scheme Saraan Bercaga will hopefully be implemented in the second half of 2022. So with that, thank you very much once again to RAM for inviting me to speak this afternoon. I'll be happy to take whatever questions you have at the end of this during the panel discussion. Thank you very much.
Thanks for the introduction, Lee Ming. A very good afternoon to everyone. Today, I'll be presenting on the topic leveraging home equity for retirement opportunities and risks. My presentation will be divided into 3 sections. Firstly, I will look into the need for reverse mortgages, where I'll delve further into the demographic trends which Datuk Chong has touched on briefly, as well as the inadequate state of retirement savings in Malaysia today. It will become clear why reverse mortgage has a role to play in the current environment. Secondly, I will examine the features of reverse mortgages and how they differ from traditional mortgages. More importantly, I will lay out the key risk factors that rating agencies will have to look out for when assessing such products and how originators can mitigate these risks. Lastly, I will briefly cover the various policy options that the government has in terms of addressing the worsening retirement savings crisis, as well as touch on the roles of the corporate sector and bond market in helping Malaysians meet their retirement needs. Next, please. As you can see from this chart, Malaysia has already met World Bank's threshold of an aging population in 2020, which is defined as a country that has more than 7% of its population above the age of 65. Based on World Bank projections, Malaysia will be an aged country by around 2045, when the percentage of population above the age of 65 hits 14%. Next. To be fair, aging is a global trend and reflects generally lower birth rates over time and improvements in life expectancies for the country. In terms of fertility rates, Malaysia is somewhat in the middle of the pack. Nevertheless, at around 2 births per woman, Malaysia falls slightly short of the 2.1 needed to sustain population growth over the longer term, which means at some point, the Malaysian population base will start to decline. Next. This is another perspective on the Malaysian population aging profile. This time we look at the old age dependency ratio, which is defined as the number of people over the age of 65 per 100 people in the working age. The higher the number, the higher the burden shouldered by the working population to support the old during their retirement. Malaysia's old age dependency ratio is currently at around 10 and is on a steep upward trend in the recent decade. And if you compare it to the global average of 14, it is still lower, and almost half of that of our neighbors, Singapore, which clocks in at 18. Next. As we project Malaysia's population age structure into the future, the urgency to act now becomes clear. In 20 years' time, we can see the pyramid disappearing or inverting, visually indicating the higher burden on the younger population to support the age. Therefore, policy reforms must start now so that we are adequately prepared for the future. Next. I would like to cover the 2 main pension schemes that help Malaysians fund their retirement. The EPF is the bigger of the 2 funds with a size of around 1 trillion. It is publicly run defined contribution scheme for private sector employees and funded through monthly contribution from members and their employers. For public servants, there's a defined benefit pension scheme that's tax funded. To reduce the burden on government finances, the Pension Trust Fund was established in 1991 with an initial endowment of 500 million ringgit. It was later incorporated as Kumpulan Wang Amanah Pension, or KWAP in short, in 2007. Today, it has a fund size of around 150 million. While the two funds or schemes are both sizable and has wide coverage, there remain concerns over the adequacy and sustainability, which I will flesh out in more detail in the following slides. Next. For the EPF, only 20 to 30% of members, depending on how you look at it, whether on a total membership basis or active membership, has achieved basic savings rate at their respective age. These basic savings are actually quite low, given that the 240,000 required at age 55 can only last 20 years if spending is kept to a bare minimum of 1,000 ringgit per month. And because of the COVID-19 pandemic, the basic savings rate achievement has been set back by around 10 years. Next. Due to the severity of the COVID-19 pandemic, the government has allowed members to tap into their EPF savings. The unprecedented move has resulted in around 101 billion being approved or dispersed to 7.3 million members through the various schemes. These amounts exclude the recently announced special withdrawal of up to 10,000 ringgit, which could reduce savings by a further 60 billion. On top of that, there is a further impact from an estimated 9 billion in lower savings due to reductions in statutory contributions that has been implemented up to the middle of this year. Next. This slide highlights the dire state of retirement savings for the majority of EPF members, with 6.3 million members having less than 10,000 ringgit in their EPF accounts. The special withdrawal will further reduce their savings to negligible levels, making retirement a real challenge for them. Next. As for government pensions, civil servants suffer from a serious erosion in purchasing power as their pensions are tied to their last drawn salaries up to 60%. This chart highlights the severe impact on inflation on savings and pensions since the 1980s. Essentially, inflation has eroded purchasing power by around 70% during this period. Next. While the government has in the past introduced pension adjustments to cater to rising cost of living for pensioners, its ability to continue doing so is constrained by its hefty annual spending on government and emoluments, pensions, and gratuities in the last decade, which range between 40 to 50% of its annual operating expenditure. This calls into question the sustainability of this defined benefits pension scheme. Next. Other than the pension funds, Malaysians have stashed away their savings in banks, unit trusts, and private retirement scheme. Individual deposits within the Malaysian banking sector amounted to 837 billion, or slightly above a third of total banking deposits. These deposits are very secure, but generates very little income or profit, especially since the 2007-2008 global financial crisis. Currently, FD rates ranges between 1.7 to 1.8% per annum, which is inadequate to offset inflation. To get higher returns, many have invested in new unit trusts, which amounted to slightly over half a trillion ringgit in net asset value in Malaysian funds, which invest in the stock and bond markets domestically and abroad. There's also a private retirement scheme that was meant to supplement EPF savings. Contributors also benefit from limited tax relief, which has been extended to 2025. However, the take-up has been very slow, as the funds only amounted to 5.6 billion as at end of last year. Next. Besides the earlier mentioned savings and investments for retirees, many Malaysians have their wealth tied up in property. Malaysia has a high rate of home ownership of around 77%. Among the elderly, the rate may be as high as 90%, as most of their property was bought when home prices were affordable. Relative to our neighbors, the home ownership rate is quite commendable. Singapore clocked in at around 90%, while Thailand registered 80% home ownership rate. Although the value of properties have grown tremendously since the turn of the century, many retirees are unable to tap on this growth unless they sell their homes, which most are reluctant to. This is where reverse mortgage schemes like Cagamas's schemes Saran Bercaga or SSB comes in. Next, please. This slide compares the various approaches to unlocking value from property. Reverse mortgages allow retirees to charge their homes in exchange for lump sum proceeds, monthly income, or a mix of both. There are no interest and principal repayments, and they can continue to reside in their property. They could also opt for home equity refinancing, which is a traditional mortgage for lump sum proceeds. While they can continue staying in the property, they will need to service interest and principal payments. The failure to do so will result in a default and the financial institution foreclosing on the property. The final option is to sell the property. However, retirees would need to find another home, which would mean rental commitments. Some may downsize to a smaller property, but this only reduces the amount realized from the sale. Next. Because the features of reverse mortgage are very different from traditional mortgages, the risk factors faced by reverse mortgage providers are different. Unlike traditional mortgage, the credit risk of a reverse mortgage is not driven by the potential default of the loan. Rather, the main risk factors are tied to the mortality of the underlying borrowers and the net liquidation value upon the sale of the underlying asset. There is no recourse to any other assets of the borrower or next of kin. Reverse mortgage providers also face interest rate risk, although this is also the case for traditional mortgages. Next. This slide shows the hypothetical example how losses could be sustained by reverse mortgage providers. As reverse mortgage providers can only sell the property upon the death of the borrower, there may come a time when the collateral value may not be sufficient to cover the loan, especially when the borrower lives longer than expected, or if the value of the property does not grow or declines. Next, please. Of the key risk factors, longevity risk or mortality risk will be the most pertinent for reverse mortgage providers. As you can see, the life expectancy of Malaysians have been generally on the rise, with the life expectancy of women and men being at 78 and 73 years respectively. Reverse mortgage providers will need to monitor and adjust their monthly payouts to reflect the changes in life expectancy in the relevant markets. Next. Despite average household prices doubling, in terms of the risk of market value decline, it is deemed low in the Malaysian context. In the past, property values have held up quite well on the whole, even during periods of economic uncertainty. In fact, average house prices have increased 2.5 times between 2000 and 2016. Next. Despite the average housing prices doubling from 2010 and 2020, prices have been relatively stagnant for the past few years due to the very challenging economic conditions brought about by the pandemic. Property prices have also been affected by overbuilding in certain locations, for example, in the Johor market, where there has been a huge oversupply of high-end and high-rise properties. On the whole, landed terrace properties outperform high-rise units, and the reverse mortgage provider has to be very familiar with the demand-supply dynamics as well as the pricing trends in the various localities that they serve. Next, please. I won't touch too much into this topic, as reverse mortgage providers are also exposed to interest rate risks, very much like traditional mortgage providers. With regards to Chagamas, they have demonstrated the ability to tap into the local bond market for cheap long-term funding to mitigate this risk. Next, please. On the whole, we view that SSB is a good option for retirees to supplement their retirement income, especially those with inadequate savings but owns a property. However, it cannot be a panacea or a sole funding mode for retirement, as the amount to be unlocked may still be insufficient to cover expenses. For this table, I have used Chagama's reverse mortgage calculator to arrive at the monthly lifetime payouts. Assuming the borrowers are a 55-year-old couple, property is a freehold landed terrace in Petaling Jaya with a market value of 600,000. Sorry. The max monthly payout is just 914 ringgit per month, which is quite low. If we alter the property type to high rise, the max monthly payout declines further to just 563 ringgit. Next, please. Therefore, there's still much to be done in terms of government policies, in terms of helping Malaysians build their nest eggs for retirements, and for Malaysia to meet the UN Sustainability Development Goal #1, which is to eliminate poverty in all forms. The recent increase in minimum wage to 1,500 ringgit per month, effective this May, is a step in the right direction to help Malaysians deal with the impact of inflation, as well as to allow Malaysians to set aside a bit more for their retirement. I won't delve too much into the other policy options now, as Puan Havati, a fellow panelist, will be sharing her views on this matter during the panel session. Next, please. Finally, we view that there are definitely opportunities for both the private sector and the bond market to help Malaysians cope with retirement challenges. For instance, the private sector can think of financial innovations, structured finance being one of the tools that we can use, which can be tailored to and structured to meet risks and high yields that may suit different investor risk appetites. There's also room for product innovation, for example, assisted care, to cater to the evolving needs of the aging population. And perhaps there's opportunities to marry both financial and product innovation as well. In the area of social financing, where property services sector gains a bit more traction in terms of looking at impact-based financing and meeting sustainability goals, not just solely at profitability or quality as a decision-making metric. With that, I will end today's presentation, and we'll be happy to answer any questions that you may have during the panel session. Thank you.
Good afternoon, ladies and gentlemen. As you heard from the speakers earlier, aging population, drop in retirement savings after the 3 I's, I-Lestari, I-Sinar, I-Citra withdrawal from EPF, which saw an alarming number of people having low savings. And in Dr. Chong's presentation slide, 70% of retirees who withdraw their savings at the age of 55 use up those savings within 10 years. These numbers can only get worse after the 4th withdrawal, which will happen in April. How would people rebuild their savings? Is raising the retirement age a possibility? Adding to this, the clear and present challenges of the other 3 I's, inflation, interest rate, income, i.e. wages, both in terms of sustainability and adequacy, especially for the vulnerable groups. What can and should the government do in terms of social protection to help the population at large to afford at least the basic living standards when they retire? What and how can one plan for retirement? Obviously, these issues should not only be considered when one reaches retirement age. People should start planning from a young age. To help us unpack these issues, today we speak to three experts in their respective fields. First, Dr. Chong, CEO of and President of Chagamas, Ms. Hawati Abdul Hamid, Deputy Director of Research Institute, Deputy Director of Research of Khazanah Research Institute, and Tong Man Wai, Head of Corporate Ratings of RAM. We will discuss policy options available to the government, as well as options available to individuals like you and I, especially for those who are nearing their retirement age, to help them continue living comfortably in their golden ages. We will also get an update on the progress of SSB, the reverse mortgage product from Chagamas, as well as recent opportunity and potential impact of this on the property market. First, let me turn to Hawa, Ms. Hawa of KRI. Thank you very much for joining our webinar this afternoon. In the KRI report titled Building Resilience Towards Inclusive Social Protection in Malaysia, which was published in September last year, it recommends a life cycle approach to social protection. Can you give our audience an overview of this life cycle approach, as well as a policy recommendation for the government? Given the government's current financial positions, it may be challenging for the government to implement all of these recommendations outlined in the report. It's a very thick report, I've read it. Not every single word or every single page, but they are very good recommendations. Is there a need for the government to prioritize? And if so, what should the government focus on first? The SSB from Chagamas is obviously an option for property owning retirees. What are the options available to those who do not own a property? Over to you, Ms. Hawati.
Okay, a very good morning to everyone. And thank you, Chong, and thank you also to RAM Ratings for inviting me, representing KRI, to speak at this forum. So if I can summarize, there are broadly three questions that has been posted by Chong to me. First is in terms of our approach of recommendation on life cycle approach to social protection. Secondly, on the priority of the government in terms of the implementation. And thirdly, on what are other options in the event that, in the context of today's discussion of reverse mortgage. Probably, maybe if you allow me, probably I'll take the third question first, because I think my response to this will be subsequent to the first and second question. Firstly, I think I would like to congratulate Chagamas for putting up this option or product as an option to our population, particularly those who are aging. In the sense that we know for a fact that there are people who might be cash poor, but they are asset rich. And in this regard, I feel it is very, very timely, and it is a very, very relevant product that Chagamas is offering to our population in order for them to unlock their equity, housing equity. That's one. And I feel that there are a lot of potential in this regards because of the fact that has highlighted by Man Wai just now in terms of our eldest home ownership up to 90%. Yeah, I was quite surprised to see that rate because I thought it is around 70 or 80, but it is much higher than that. This means that there are great potential to tap further this market. And thirdly, I think when based on several studies conducted by think tank and other university in terms of preference of our elderly to age, a lot of people would prefer to age in place, meaning that they would like to continue to stay in their home and to enjoy their retirement. But of course, this is a new product, and based on several experience, international experiences, will take some time for this to be taken up. And you also have highlighted there are several factors that will come into play, such as the interest rate risk, the property valuation risk, and so on and so forth. And at the same time, I think we also need to put a lot more effort to create awareness and literacy among our elderly in order for them to take this opportunity. By saying that, I think there are still this means that this product might be a very niche product that can provide some appeal to a very small or some segment of the population. So given that is the case, how do we address other old age risks that Man Wai have shared with us just now? And hence why I want to draw our attention on our report that Chong mentioned just now. We actually published this report with a recognition that after several decades of progress we have made in terms of providing social protection, a good protection system in the country, yet our system still suffer with this coverage issue. Okay, if you are talking about just old age issue, Man Wai already highlighted that we have this adequacy issue in terms of low saving rate, EPF saving rate. But I would like to also highlight that this is still a very small population covered, because only about 40% of our working age population are part of EPF system. And even so, within that 15 million of members of EPF, only about 7 million who are actively contributing. The rest of them are not really actively contributing, which means that a lot of them have a very low saving level. So that's one. Another one, this means that if I mention about working age population, whether active or not actively working, so there are about 40% of them are considered members of EPF, but another 20% are just outside workforce, and they are totally out of this system. So all in all, there are about 60% of our working population do not have actually a good retirement plan. So that is one. And hence why I think there is a really urgent need for us to address this not only coverage issue, but as well as adequacy issue. And we have seen that COVID withdrawal have exacerbate this problem further. And later I will just like to highlight some recommendation that we are putting up on the table on how we can address this coverage issue. So in terms of life cycle approach that we are trying to bring attention is where we want for people to recognize that along our life cycle, we always constantly face risk. For example, today I might not be vulnerable, but if I suddenly lose job, or if I suddenly injured at work, so I will face this income loss. Hence why we need to shift our mindset from looking at this narrow poverty targeting, just trying to identify who is poor and who is entitled for assistance, but have this paradigm shift to actually look at core life cycle risk. And the core life cycle risk, we do not invent this. I do not invent this. Actually, there have been a long history on core life cycle risk developed by international convention, especially under ILO, which have identified at least nine social protection branches, ranging from risk at childhood, risk at working age, which include things like losing job, injured at work, and so on and so forth. And at the end of our life cycle, it is the old age risk. And then hence why I would like to caveat a bit in terms of the recommendation that we are putting here in the report, the Building Resilience report, where we are actually trying to ensure a social protection floor for everyone, inclusive. Is not just targeted to the poor. What happened right now in our social protection system, we are so fixated with poverty targeting, which I don't see, I don't have much issue with that. But I think we also need to be prepared in building a more inclusive social protection system that provide the access to everyone, and this protection floor come in place when a risk is triggered. And hence why we bucketed the recommendation in terms of providing a social protection floor or basic income during childhood, and then for another model to provide basic income for all old age. And bear in mind, this is just a minimum level of basic income. We are not talking about a decent one, because what we feel is that what we need is a multi-tiered social protection system whereby a floor is provided to everyone, and then it is up to individual effort to top up against this floor, such as we have this mandatory EPF retirement as a mandatory saving, and we have also another layer such as PRS as voluntary. So
Awati, sorry to interrupt you on this one. I just thought of something. There are commentary that says even middle income, the M40 or M20 or whatever, may also need to be protected in a way. Is that what you're referring to?
Yes, that's true. The reason we have this thinking is because we don't consider poverty as static. People are vulnerable to face a lot of risk throughout their life cycle. Hence why we need to have a long-term solution to address, to provide a necessary support automatically when people face or a risk is crystallized. Hence why we are trying to create this paradigm shift to actually target the life cycle risk. And if you look at our system, what happened is that we have this what we call bifurcated system, whereby those who can afford depend on their individual effort. For example, you contribute to the social insurance or private insurance, or you build up your saving in EPF. Those who are poor can access some support from government via tax-funded social assistance. But what happened is that government are so constrained in terms of fiscal space. Hence why we will always try to find ways to actually make things targeted. And what at the end of the day, what happened is that we are not able to expand the support to those who are what I call is not poor yet not rich, which we call this missing middle. Those who are working in the informal sector, those are self-employed, and if you know, a lot of our formal social protection scheme rely on the enforcement in terms of this clear relationship between employer and employee. But we know that with disruption of the technology, this is no longer the case. A lot of people do not have employers, and hence it has become more difficult for the government to enforce this regulation. Hence why the idea that we have here is to really integrate the funding of social protection, combining the contribution from workers or individual and the employers, while they have this full-time job or formal employment. But we need to integrate government as the third pillar in the social insurance or formal social protection scheme, rather than government take their social assistance program separately outside the other side, this and the other end of social insurance scheme. Hence, so that government will come in when, for example, women have to step out from the workforce due to care work, due to child rearing process, or people are just jobless, and government need to come in to step up and provide for the contribution. I think this is an ideal way to do, because otherwise the whole problem will come back to the government. Hence why I think a better way is actually to prepare ourselves in building this a more resilient system, rather than try to address poverty issue right there and then when we have the problem. So in terms of priority, if I have still time, we think that in terms of, if you follow the report, we have recommended on universal child benefit, even though you may think that the cost is quite high, but we consider this as a low-hanging fruit. Why? Because it can be implemented within the fiscal space already. What happened is that, if you realize, we already have this social assistance provided by tax funded via Bantuan Sara Hidup or Bantuan Keluarga Malaysia, about 6 billion. And in addition to that, we also have other small schemes under Jabatan Kebajikan Masyarakat that target child in poverty, that alone would sum to about close to 6 billion. On the other hand, what we don't really realize is the relief that those at the other end of the income group receive in terms of tax relief. And we estimated, based on data that we get from LHD hand, for 2020, the tax foregone by government is already 7 billion. So summation of this would result in about 14 billion that we can actually implement universal child benefit that can actually improve the progressivity of the bantuan that is available to people who have children. So that's one. The other one, of course, in terms of aging, but our thinking in this regard is slightly should be implemented in a more progressive manner, meaning that in order to the discussion, I mean, a lot of the discussion in order to provide the pension floor for inclusive for pension floor for everyone is to have this tax-funded social pension. But it is very, very costly, and I think there will be a lot of pushback. Yes. Hence why our thinking is that we start the process now, whereby, if you know, the system that I mentioned just now leave a lot of people in the middle, missing in the middle. Hence why we think that there should be a solidarity fund in the form of social insurance pension, whereby probably 1% of currently EPF contribution can be channeled to this social insurance pension that provide pension floor for everyone at a very basic level. In this regard, I am talking about poverty line income, so that everyone would be able to enjoy this basic floor. And that is one. The other one, another opportunity that we can discuss further, is in terms of long-term care, there is also a lot of opportunity where social insurance pension can play a bigger role in terms of providing sustainable financing. And the thinking that we have here is to have one payer model in terms of setting up the social insurance pension, but we can have a lot service provider. This can be provided by private sector in terms of the care services, as well as by the community or by social enterprises. So hence, this is some of the recommendation and the things that we are advocating to ensure a universal social protection floor for Malaysians. Over to you, Chong.
If I may summarize, Rahmawati, there's a lot of things to digest, both in the report and what you clarified just now, that we need more coordinated planning and organizing the social protection plans and action or programs. That there's also another area that there need to be more coordination between private sector and public sector funding of of this social protections project,
Mhm.
so that the government, the burden of this social protection funding doesn't solely borne by the government. And based on the recommendation that you have and the report, it seems to imply that, suggests that a lot of this social protection project can already be accommodated by the current fiscal position of the government. Would I be right in saying that?
Yes, I think there are a lot of opportunity by streamlining and coordinating our available
Mhm.
resources. That is
Right.
what we figure out when we look closely in terms of the design of the program, existing program, and in fact, if we get our act together, a lot of administrative costs in terms of poverty targeting can be saved, and we can just have a anchor or a main social protection scheme that cater to everyone, and it doesn't have to be just exclusive to the poor alone. It has to be, in order for us to have this inclusivity and solidarity in our society. I think also building the trust on the government. This is something I think we have to move away from narrow poverty targetings, and yeah.
One message is very loud and clear from what you said is, if the government doesn't, or the society doesn't deal with this problem, the problem can only become bigger later on, and we still have to deal with it.
Mhm. Yep.
Thank you
Yeah.
for that in-depth information. Can I now turn to Dr. Chong of Chagamas? There have been quite a few interesting questions raised from the audience, and I also have my list of questions. So let's well, since I'm moderating, I have priority in choosing my questions. Dr. Chong, you mentioned the SSB program came out from, reverse mortgage are offered in the US and many other markets. You specifically mentioned Korea and Hong Kong, of course, also the US. What are the lessons learned from this model in those markets that you have incorporated into the SSB project?
Thank you, Chong, for the question. Well, essentially, I think what happened when Korea and Hong Kong particularly introduced reverse mortgage, it took them some time to gain traction and acceptance from the public, from the people who they're targeting for, simply because of the culture, the Asian culture, where you want to inherit, you want to give the property down to your next of kin, for example. So there's a lot of drawback in the sense that people was quite reluctant initially in both those countries. And but if you see the statistically, after a few years, the number of borrowers for reverse mortgage in both Hong Kong and Korea has actually spiked up. There's a greater acceptance, even from the Asian, those in Asia, basically in terms of reverse mortgage as a product. Now, I think if you actually have seen the statistics actually in US, when COVID-19 started, there's actually a spike, a huge spike in terms of reverse mortgage loans taken by the retirees. And similarly, we do see a similar trend, but maybe to a lesser extent in Korea and Hong Kong. But I think one of the lessons that we learned as such is then, how do we create awareness? How do we ensure that the public is comfortable with this product? And that is why if you look at our awareness campaign, our awareness features that we have put in place in social media as well as the mainstream media, basically caters to address some of the concerns of the public in terms of, obviously, as I said, whether they want to keep the property for their children, they need the money at this point in time. So there's always a trade-off. So that's why it's important for us to engage, for example, the Debt Management and Counseling Agency, AKPK, to provide that assurance to the public that basically, well, you are not forced into this product. You need to understand the feature of this product, and you are happy with it, then you should go into this product. Otherwise, don't go to reverse mortgage. Look at the other options that I think Man Wai has outlined just now. There are various options available, but we thought at least for a certain segment of the society, this reverse mortgage is actually a good option, particularly to those maybe who feel that they have already spent a lot of money to educate for the education of their children. The children are doing very well, so they don't really need the remaining property that they have. They can actually monetize it, or they do not have children, or for example, they are still single, for example. So there are various category of people, even in the initial stage, when we talk to people about their interests, we actually do see some of them actually say, yes, why not? And some, like I said, even though they have children, they actually said, my children is now a doctor and a lawyer, so they don't really need my house, right? Let me spend the money. Let me, for example, just to quote, well, someone that I know who says, you know, when I travel, I should go on business class. Otherwise, my children will take first class next time. So what it means is basically I should be able to enjoy whatever that I work for, at least if that is their priority. So again, here's a choice to the retiree, whether they want to keep the house, they want to spend the money, they want to enjoy life. Really, this is the option. But really to the group that is cash poor and asset rich, it is important for them to find avenue, right? I mean, we don't want them to be suffering, you know, going to, you know, spend only 10 ringgit a day and things like that. So they need to spend, so they need to find the avenue. If the children, for example, are giving them enough monthly allowance, then obviously reverse mortgage is not necessary. So here again, like I said, this is merely an option for people who need to have more money to spend, who need to monetize their asset if they're cash poor. And basically, as I said, this is, from our perspective, a good option available for those who need it.
Right. Thanks. I certainly think culture has a lot to play on this take-up for reverse mortgage, especially for Asian, where family properties are always seen as crown jewels of the family, right? And of course, there's also the argument that you mentioned that I read in a recent article that the title says, why don't you spend the inheritance of your children yourself, right? Instead of, example, you mentioned the children's are doctors or well-to-do themselves. They don't need the inheritance. The one question I would have is on, you know, the need for counseling. When a retiree is going to AKPK for counseling, and they bring their children, would that be a problem? The children may object to it and say, you know, Dad or Mom, please don't do this because it's a family, and try to influence the parents, the retiree parents, against taking up the product. Do you see, has that been happening? And to date, I understand you only launched it in December last year and probably only started physical meeting with people beginning of this year. How has been the take-up rate so far? There's also reports that, I'm not sure whether this is correct, initial allocation of 100 million ringgit. What has been the take-up? Do you observe any trends? And is this take-up rate in line with your expectations? Yeah.
Okay, there's many questions there, but let me try to answer them. Firstly, bringing your children for counseling and advisory. Yes, you are actually encouraged to, but you need not if you don't want to. But it's good actually for the children to next of kin to understand what the parents are getting into, so that at least if the parents get into this scheme, basically there is a full understanding by the children. So although it's not a requirement that the children need to attend the counseling or the session, basically children can actually accompany their parents to the counseling session with AKPK if they want to. I lost you. What's your second question is about?
Take-up rate.
Yeah, okay. In terms of the take-up rate, I think since January 17, when we started the rollout through EPF branches and AKPK, we have received about 400-500 queries over the phone. Oh. Some walk-in to and making appointment to EPF as well as AKPK. I think some of them are still waiting for their appointment slot technically, but the take-up rate, the inquiry has been very encouraging. It has translated into quite a substantial number of applications. I would say that it is actually meet our expectation. We don't envisage in the first 6 months at least that the demand will be so great, but in fact, we are pleasantly surprised that we have actually got a good number at this point in time. But like I said, we were going through the process now. In terms of the valuation of this property, before we actually process the loan application and subsequently to disburse the loans out. We have actually got borrowers who are very desperate actually in terms of money, and in fact has been calling our officers here to expedite the process and all that. But there are some who probably they can wait longer. So in terms of take-up rate, I would say that it meets our expectation. We do not actually envisage to hit a substantial amount in the first few months at least, because we need to create awareness. And secondly, I think this currently is only open to Klang Valley. So there's actually a limited in terms of target borrowers. But I would say that, like I said, the numbers is quite good.
Are we approaching the 100 million limit, initial limit?
And definitely not. When you look at the loan disbursement for reverse mortgage in the initial years, in the initial months, it will just be a smaller amount. I think Manwai just now showed the calculator. If you are 55 years old and earning a property of 300,000, you only get a few $100s. So we do have borrowers who are actually coming in with a 3 million house, and they are 70 years old. So they are getting like 10,000 a month or even more. So for these borrowers, obviously that's the disbursement amount. So to make use of my full 100 million, I think we envisage at least by 2023 end. But we obviously would also need to blend our 100 million. We will probably need to go to market for further, depending obviously of the interest rate expectation. As you know that probably now is a good time given the lower interest rate, and expectation is the interest rate will go up. So we'll find the correct blending in terms of the funding so that our interest rate risk is somewhat mitigated to the extent.
Since we're on this point about funding, I can't help but noticing the 5% fixed rate, interest rate that is under the SSB. And I just had a quick look at the bond yield. That is equivalent to a 30-year AAA rated corporate bonds. Now, there are two questions on this point. One, how did you come to this rate? Is it based on certain assumption or expectation? And two, will this rate be reviewed, subject to review if interest rate goes up or goes down? Will it go up or go down together with it? Taking into account the risk, interest rate risk that Manwai mentioned in his presentation slide, that the reverse mortgage provider is exposed to in terms of funding, between funding and, of course, lending costs.
Well, basically, the interest rate of 5%, if you measure against the current, if it has been offered at floating rate, probably is slightly higher. We would expect a floating rate mortgage today running about 3.5%. Obviously, this is higher. But as you know that this is a 35-year, 40-year, depending on how long this person is going to live, it could even 45 years, for example, is only at 5%. So this the borrower is not actually taking on the interest rate risk. Obviously, the government is, and that's why I said we will have to come up with long-term funding to be able to match that equivalent. To some extent, your question is how did we arrive at 5%? Like I said, if we're going to put any numbers higher than 5%, I think it will be construed as a very high and expensive product. Okay, so 5% looks reasonable in terms of a long-term. So if you actually measure against a government housing loan, for example, it's 4%. So 5% ain't that bad, and you're correct. It is probably sitting on the 30-year yield curve.
AAA rated ones.
Probably in between MGS for 20, 25 years, 30, 35 years type of tenor.
Right.
So in essence, yes, we are looking at it more, firstly as a developmental agenda. We actually allocate this 100 million. We are able to actually generate income basically to meet the requirement. But as I said, moving forward, we will continue to go to the market to source for funding. To answer your question, obviously, if OPR goes up and interest rate goes up, the next batch of borrowers will not get the 5%. So technically, to answer your question, the 5% is good for the current batch of borrowers. So until a time when, for example, OPR get adjusted, then Cagamas will need to look at what is our pricing in the market then for this yield curve, 30 years, 25 years, 35 years, because technically not all the loans are going to be 35 years, right? Some could be 10 years, some 15 years, some 20 years. So we need to look at a blended approach in a sense. And so essentially you will see that we may need to make some adjustment if interest rate goes up. Maybe to answer your question as well is why you're going to fixed rate and not floating rate. So I think essentially in Hong Kong, for example, there's a floating rate reverse mortgage which is offered by banks, guaranteed by HKMC. There's also the fixed rate reverse mortgage which is offered by HKMC. And just as an illustration, the monthly payout for those who opt for the fixed rate is actually about 20% higher than you have opt for floating rate, because I think you know in financial modeling,
Right.
you factor in the volatility of interest rate. Obviously, it could be more costlier. So in our case, when we did the financial modeling, basically the 5% interest is fixed. So in the sense that we actually remove the volatility of interest rate from the modeling for the customer. So in essence, you see that that is to their benefit. I understand your question in terms of the risk. Obviously, we will need to put in place mitigants ourselves to ensure that that funding is definitely, we are able to sustain in terms of the funding that we are offering to the reverse mortgage borrowers.
Right. Right. I can certainly relate that. I mean, there's my colleague Manuel and I, from a rating agency perspective, will always factor in risk, whether interest rate risk or longevity risk or other sort of risk by stressing, by putting in stress scenarios. But I was actually quite surprised that it makes 20% difference in disbursement between fixed rate and floating rate in the case of Hong Kong.
Well, that's what we understand from Hong Kong.
Right.
But eventually done the simulation for ourselves in terms of that. But later on, actually, Cagamas is trying to onboard the banks to offer the floating rate reverse mortgage, and then you will see the difference between the two. Obviously,
right.
if you get interest rate as per a point in time, I believe the interest rate for floating would definitely be lower, but obviously it can change from time to time.
Yeah.
Whereas a fixed rate is actually removing the volatility from the borrowers and actually absorbing the risk, taking it away from the borrowers.
Okay, I guess the message to our audience is if they are keen to take out or consider this product, they should do it soon, right? Before the 100 million runs out and before interest rate goes up, right?
Well, I suppose it's not the 100 million will run down. Basically, we will continue, as I said, to fund based on the risk appetite that we have at this point in time. We don't envisage that the portfolio will go up the balloon so significantly, but as I said, we at least expect the 100 million to last until end 2023, and perhaps with some blended funding, it could last us another 2 more years, 3 more years in that sense. Yeah.
Right. Okay. I also given that the condition for SSP product is age eligibility is 55 years and above. So the youngest person who can take up this scheme is age 55. And assuming he lives to 70 or 80 years old, which I think one of Manrai's chart says 70s, late 70s, right? Life expectancy for both male and female. That means it could be 20 to 25 years long only. Would I be right, Dato'? in your modeling for this product?
Yeah, I think essentially we refer to the mortality table. We refer to obviously also in terms of the NAPEC data in terms of appreciation or property valuation to some extent. So yes, if someone who comes in at 55, expectation is, as you said, could be about 80 plus, or maybe with medical advancement could go to 85.
Right.
Yeah, so all those
Or
things.
95 for some people.
Obviously there are exceptions that
Yes.
they are still there at 97, 98. So those are exceptions. Obviously, we will have outliers. But in any case, I think when you look at the modeling, we actually taken into factors like that in terms of coming up with the actual monthly payout. So actually, if someone is interested to know for themselves actually how much the payout will be, you can actually go to our SSB website, which is www.ssb.chagamas.com.my. There's a calculator there. You just put in your age, you put in your value of property, you put in the location or there are various categories because, as you know, landed properties are obviously better in terms of appreciation compared to high rise. Could be also between Kuala Lumpur, for example, you are a Bangsa house versus somewhere in some area in Selangor. So technically, there are certain factors you need to key in. You will get you will get the estimated monthly payout from the calculator, and that would actually give you some indication. I said that's not the final number because you need to go through the actual valuation itself.
Right.
And so that would actually determine your interest, whether you think that amount is good enough for yourself. We have people who come in and say after calculating, they feel that it's too small for them. It's 5,000 ringgit not enough for them to spend because of their existing lifestyle. So they say, no, we don't want that. But there are some who feel that, 2,000 ringgit is probably enough for that. It really depends on the lifestyle of the respective individuals.
Right. For the valuation process, does it involve an external valuer, or is it just a discussion between Chagamas and the borrower?
No, I think all the process are professionally done. So we actually would need a professional valuer to give the valuation report so that there's no dispute between Chagamas and the borrower. So I think in any case, we have a very highly reputable valuers that have been selected to undertake this process. So valuation are done professionally by professional valuers. We don't have professional valuers in Chagamas, so we are not undertaking that process. But I guess, Chong, to answer your question as well, if you look at the terrace house, for example, in Bangsa or in Bandar Utama or in PJ, there's more or less, what is the range like, right? So the valuation report will obviously affirm that valuation to some extent, but obviously for terrace houses, I think it's quite simple in the sense that, houses around this area is probably 800,000, or this area is 1 million, this is 1.2 and things like that. It's probably 10-20% plus minus that thereof. Whereas when it comes to maybe bungalows, mansions, and that one is just a bit more complicated when it comes to valuation.
In any case, the valuation cannot exceed 3 million anyway, right?
No, the valuation can exceed 3
million. Funding, yeah.
The value of the reverse mortgage value that we're giving is 3 million. Yeah.
So sorry, Dato, just one minor point on this one. If a independent valuation report is required, who will be paying the cost? Ultimately, it will be the borrower, right?
Yeah, the borrower is ultimately paying the cost. I think they have the option of paying it upfront. Otherwise, they can include it in part of the loan.
Right. Okay. And if the borrower needs to move out of the house for medical purpose, what is the process and what are the alternatives for them?
Well, I think if someone needs to move out because of medical, and obviously assuming that's the remaining borrower only, there's only one left, and that's the one that needs to move out for a medical facility. Obviously, they can move out with the permission and approval from Chagamas.
Right.
What could actually happen is in those instances, in fact, the house could even be rented out and renter be used to help this person pay off his medical as well. So yes, they can, but obviously they need to come to Chagamas in terms of approval, that's all. Okay, but it is only for a selected reason, like for example, for medical, but for anything else, you can actually just repay the loan and cancel off the deal. But if you need, like I said, because you still want to enjoy the facility, but you can't stay in a house because you need medical attention, then obviously we have to be sympathetic to allow for some form of consideration to be given for you to avail to the medical facilities that you require.
Earlier, just now you alluded to when we're talking about the 100 million limit and also funding. Dato', if I understand you correctly, you could be looking at, Chagamas could be looking at mixed funding once we're approaching the end of this 100 million. And there could also be, banks could be invited to provide this product on either floating rate or fixed rate, depending on the bank's choice. Obviously, they may also need funding themselves, right? So, if I could turn to Man Wai, I mean, you come from a rating agency. If this sort of funding is structured as a capital market product, like a bond or ABS, structured finance stuff, what are risk factors that you would consider in trying to credit assess it, if you like? Man Wai?
Yeah, I think I mentioned, some of I think the risk factors that we have already covered in the presentation will be the areas that we will look into. But I think one thing challenging is especially trying to securitize it, because it is a product that doesn't pay interest or principal during the tenure of the loan. So I would assume that there would need to be a specific target, investor who may be able to accept this, type of cash flow profile. But it could be a very limited, market for this product. This is my view.
Right. Well, I understand. Dr. Chong said, he doesn't expect this product to be suddenly explode in the market. But what if it does? How do you think this reverse mortgage market, if it grows big, how do you think it would affect the property market, both in terms of the primary as well as secondary market? Will it lead to a high demand in good location and types of property? For example, landed property in the Chagamas SSB model, landed property has higher LTV, if you like, implied LTV upfront versus high rise. Would it also then result into faster appreciation of landed properties, or a shift or development of new choice location, for example, that have high valuation, therefore would be able to afford the property owner a higher SSB payout at the end of the day? Am I right?
Sorry,
impact on from SSB on the property market, primary demand versus secondary market for landed versus high-rise property.
I think they could be, if there is this option for retirees to not sell, you might find that there could be even a tighter market for landed property, right? Which could actually drive prices upward. I think it's a demand and supply situation. I think there are various, factors that would improve, would impact property prices. And I think more recently, I think what we are looking at now is the very high inflation in terms of cost of building houses, and this would actually translate into, more expensive properties going forward, and it will have a bigger impact to market values, in my opinion, compared to say SSB. I think SSB will give that avenue for retirees to hold on to their properties and impact somewhat the supply-demand equation. But I think overall it would depend on the general demand and supply in the particular location. I think like what Datuk Chong has pointed out, it's a no-brainer. Like you pick a terrace house in PJ, a good suburb. I think it's pretty safe to say that that property should appreciate over time. But in a less well-located suburb or in areas where there's overbuilding, especially in certain property types like high-rise, I think that will definitely have a bigger bearing on market value going forward.
Right. Well, also relating to market price of property, Dato', if I could relate the same question to you.
If I may comment on the first part first.
Yep.
In terms of the total SSB contribution to the property market, I don't think it will be significant to move market prices.
Okay.
And whether it will change the behavior for people to buy houses, I don't think someone will make a decision to buy a house because in 30 years' time I can do a SSB.
Right.
But actually, it will, consistent with the government current policy of encouraging home ownership when young. I think there's a campaign going around that you should own a house when you are very young. That would actually help in terms of accumulation of wealth and assets, which could, for example, in the twilight years or in the retirement years, be used for asset accumulation, in which you can then offload those property or do a reverse mortgage on those property to allow them to basically enjoy life in the later years as well. So it may change a behavioral pattern, but it will not actually dictate that, yes, because of SSB, I could buy a house. I don't think that would actually drive the decision, but it's about accumulating assets, and actually reverse mortgage or SSB is a form of asset accumulation when you reach a certain age of retirement, when you have no other alternative savings or money where you can spend on. Thank you.
Right. That's a message, intended or otherwise, could be read as implication of the SSB product, that landed property seems to have a higher value when it comes to funding versus a high-rise building. Now that could maybe shift people's mindset to or preference for landed property versus high-rise, especially when it comes to high-value properties. Do you think that I am reading, my reading on this is correct or fair?
But I guess over the years, Malaysians know that landed properties appreciate higher. Yet you do have Malaysians who like to stay in high-rise, who like to buy high-rise building, high-rise apartments, for example. So essentially, it's a choice. I again don't think because of SSB, it will change behavioral pattern per se. But obviously, in any case, I think any economist or any valuer can tell you that if you buy a landed property today versus a high-rise of the same price, obviously, the landed property is more likely, right, to appreciate because of the scarcity of land. High-rise is just in the air, so technically, yes, it is still there. It will still be there. But in the case of the landed properties, because of scarcity of land, the limited supply, for example, in PJ today, I think you find that it's very difficult to find new launches, right? Because basically almost the whole of PJ has been redeveloped. Similarly with Bangsa. So that's why the appreciation in the case of landed property. So I wouldn't link it per se to SSB or anything, but it's really a theory in which I believe everyone knows.
Right.
Yeah, I think I would like to add to Datuk Chong's point. I think due to scarcity of land and in order to keep prices affordable, a lot of developers have had to build upwards, right? In order to maximize the usage of the land and also to keep prices low. So I think in the newer generations, unfortunately, for a lot of people, landed properties will be actually out of reach. It may not be their first property, but it could be a property that they may eventually upgrade to because of the very prohibited prices of properties today relative to income.
Thank you. I think we're running out of time, but just two last questions relating specifically on the SSB product feature. Dato', in the event the borrower pass away, how much time is given to the children to obtain the financing to pay back the loan? And if that's question one, if there is a need to sell the properties in the market, how does Chagamas ensure that the selling price is fair and is not a fire sale? Is there a mechanism built in place to ensure that there is a fair dealing with the borrower and his next of kin?
In terms of the timing, I believe once the borrower pass away, the next of kin would need to be notified, and obviously they can come in with some proposal. Obviously, we are open to discussion at that point in time as to the time required. But I guess, as you know, the longer you take, it will cost more. So technically, faster the better, in a sense. To answer the question in terms of valuation, obviously, again, when whatever sale that will take place at the end of the period, it will be the property will be professionally valued and going through the normal auction process, as you will see for bank auctions of property for the housing loans, for example. So it will go through the same process in a sense. So I guess to answer the question, it's not a fire sale, but if you go for 2-3 auctions and there's no purchaser, obviously the value would actually go down in a sense. So to answer your question, it will be consistent with what is the normal banking practice at this point in time with regard to disposal of property, and all valuations will be done professionally by professional valuers.
Thank you. That's very clear. Okay, I think I have reached the end of this panel session. Just before we close, any 5 seconds or 10 seconds to any last words you would like to say to our audience, starting from you, Dato' Cheong?
No, I think what I wanted to just mention is Scheme Saraan Bercaga is just an option. If you're interested, obviously there are many information available in our website. You can also go to the EPF offices, and like I said, if you need professional advice, then of course you should make an appointment with our debt management and counseling agency, AKPK, so that you can get all the information required to make an informed judgment. Thank you.
Thank you. Ms. Hawati, I hope the government gets to read the report and do something about it.
Yeah, probably I just want to say that longevity is something that we want to celebrate. It also, no doubt, it comes with a lot of risk, but it also comes with a lot of opportunity. I think a lot more conversation need to be done in terms of how we think about the economics of aging and how we can actually change the product offerings, as well as the changing of consumption pattern, and the needs of the elderly can also become an opportunity to the economy.
Right. Thank you. Man Boy?
I think my final words will be a combination of both. I think I already covered it in one of the slides, that I think, like Dato' Cheong mentioned, it is an option for those who needs it, but ultimately we need policies that will help Malaysians build their retirement savings over time. And the time to act is now.
Thank you. With that, I'll pass it back to Li Meng